Clicks Group is a Cape Town-based health and beauty retail supply group, and it's been listed on the JSE since 1996. It has stores across Southern Africa.
It has a market cap of 23.3 billion, a PE ratio of 27.7, and a dividend yield of 2%.
Under the leadership of David Neal,
Yes.
for some time now, this one has been something of a turnaround story.
It has been. Look, I personally don't quite understand why you would want to go and shop for face cream and a toaster at the same time. I just don't understand that concept, but it seems to work, surprisingly enough. I mean, they've been very, very successful, and obviously their beauty stroke pharma is much bigger in their lives than the other companies we've spoken about. But once again, Bron, when we come down to the share price story, their earnings growth has been reasonable. It's been 10, 11 odd percent for 3 years in a row. But 10, 11% earnings growth doesn't support a 28 price earnings ratio. I mean, this is properly expensive.
The market is expecting super things from Clicks going forward.
But how can you get that in the current consumer environment? I mean, the consumer environment is not disastrous, but you know, our economy is not growing at 5%, it's growing at 2%, and that's a big difference.
I agree with you. I lean to the bearish side of this conversation. Byron, can you explain what's happening with that share price there?
Well, I think Clicks is the only real, beauty pharmaceutical business amongst the lot. You know, it's pure. And like I mentioned, I think the market is just
Don't forget
expecting
the toaster as well. It's not that pure.
and toasters
Toaster
and
kettle.
plates and so on, and yeah, a few electronics. But it's the only one that if you expect that theme to grow, that beauty theme to grow above retail sales in general, that's what the market's expecting from Clicks. The Body Shop is great. The ODP, which is UDP, which is the wholesalers of pharmaceuticals. People are prioritizing healthcare, buying all those fizzy drinks and muscle supplements and that kind of stuff. Clicks are at the forefront of that. Unfortunately, I feel Dis-Chem are probably better operators in that environment, but they're not listed, so they're not an option for us.
And providing some competition, obviously, to
Yeah,
that whole
look, it's
pharmacy.
This is an intensely competitive
In-store
business
pharmacy, rather.
because everyone's gone from the mom and pop to the big ones. The mom and pops are closed down effectively. So everyone's gone for the big store Dis-Chem type operation, and they're also expanding the range. I mean, you can go to Dis-Chem now and almost buy a screwdriver type of thing. I mean, they're expanding
And
the
I
range.
think we've got to watch the space that we spoke about earlier, that ShopRite element with the MediRite, that in-store pharmacy offering as well, as potentially changing the game from a competitive
It's very
perspective.
competitive.
Are we going to call it hot or not?
No, it's too expensive.
Not hot. Hot or not?
I think they might have missed the ball a bit. When you go into a Dis-Chem, they've got that whole dry food, healthy food section, and I don't know, I think they're more consumer friendly in that environment. So expensive. It's a good business, but too expensive.